This is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, do you have a retirement tax roadmap? Many of you have reached out from all around this country and have said, Chuck, I've heard you talk about we're at halftime. There's a difference between tax preparation, which is just preparing you to know how much tax you're going to owe, and tax planning, which is preparing you on learning how much less you have to pay. And I want to teach you this coming Tuesday on my radio program. I'll be teaching this Tuesday at retirementprotected.com, some of the key areas of what real wealth building comes from, right? So if you look at what the ultra wealthy have done in this country to not only create their wealth, grow their wealth, but preserve their wealth, which I think of Paul and Marcy sharing that out of the great state of North Carolina, saying, Chuck, it's not just about wealth preservation for ourselves by eliminating these unnecessary taxes. It's also so we don't pass on. We can have generational wealth transfer so we don't pass on a lot of taxes to our two sons and then future family, potential grandchildren. Well, folks, it's reducing taxes. It's eliminating the unnecessary taxes. And I talk about it on Hidden Wealth Radio, and I'll talk about and giving you specific examples and solutions this coming Tuesday at retirementprotected.com. That's retirementprotected.com. Clients very similar likely to yourselves as Paul and Marcy, who shared, look, we believe taxes are going to tax the crap out of people, to put it verbatim. And they said, we want wealth preservation, right? And we want wealth preservation through the elimination of unnecessary taxes and protecting also from taxes to ourselves, as well as passing on to another generation or two. Well, folks, I'll teach you this Tuesday, one deduction, one very little known deduction. But more importantly, I'll teach you how to use that deduction to get your money untaxed. So I'm going to talk about a couple strategies, where to put money now so it doesn't get taxed, and how to untax the money where you've already put it, where it will be taxed and likely taxed to the max. We've got about a 2.5-year sale right now, right, under this current tax situation with this Tax Cut and Jobs Act that's about to sunset here in about 30 months. And the time to get in front of taxes is when the deductions are the highest, the tax rates are at the lowest, and before your account values grow, right? Because deferred taxes equal increased taxes. Let me give you an example of not just taxes, as I think about other clients that we met with this week from the great state of Texas, but they've got some estate tax exposure. Because not only are the tax rates all going to jump up here in about 30 months, the way that capital gain tax treatment is handled is going to change for the worse. When you've got $7 trillion of proposed deficit spending over the next decade, before this new proposed almost $5 trillion of additional taxes to be added for the spending that this administration is proposing, there's only one direction the taxes can go, folks. But even if they remained similar to what they're going to change back to here in about 30 months, the cost of living and our account balances will be impacted, right? Because if it costs us more to live, we have to take out a much higher gross number from these accounts that we put away pre-tax, thinking that we would pay less tax to get the money out than the tax we paid by putting it in. And that would only be true if there wasn't this crazy thing of inflation. But inflation has been completely out of control, and it's another form of taxation. So I want you to think about it. There's a certain point in time that the government has a mandate to force you and I to take these required minimum distributions. But if predominantly where we've saved our retirement savings are in accounts that have not yet been taxed, then we have to take out a much higher gross number to get to our needed net number, which means if the cost of living keeps going up, we got to keep tugging on and taking a higher gross number, which is going to push our taxes higher, likely pushing us through the next bracket or two. Well, folks, you work hard for your money. Imagine more financial success, less stress, less worry, more time with family, less taxation, less inflation, less market deterioration. Let me teach you how to protect yourself at retirementprotected.com. That's retirementprotected.com, and learn the tax risk road you're on so you can have a retirement tax roadmap to know that up to 85% of your Social Security can be taxed, but it can be avoided. Your Medicare could hit you for an extra $600 a month deducted out of your Social Security check. That can be avoided. The deductions, right, that are going to go lower and lower can be taken advantage of today. One deduction allows you to use that against your taxable income to cover your Roth conversion taxes. So imagine a deduction in the code in one area that offsets your tax liability by Roth converting in another area, and the two can wash themselves. You work hard for your money. Let's get to work. Retirementprotected.com, retirementprotected.com.